Hello, everyone. It's Monday night, the 13th of July. And given the price action in today's market, I thought I might want to take a look uh, and make a short video. Let's take a look and see what we find. And before we do, we usually bring up a disclaimer. So let's do that. Take a look at it. Be sure to understand that I'm not trying to give any particular person here investment advice. We're just reviewing the market, and it's for educational purposes only. So let's look at a few things on this chart. This is a weekly chart of the S&P. First of all, the moving averages are way above each other, so I think that insofar as that indication is concerned, the market is still in a pretty good bullish uptrend here for exponential moving average, the 9, the 30, the 50-day, 50-week moving average, if you wish. Um, the on the caveat side of things, if I could put it that way, we made a high here and pulled back, and then made another high today, exactly at this level. So we put in a double top, and so we pull back. How far back will we go? Let me talk to you about that on the daily chart. But on the weekly chart, we could see that we still have Williams looking pretty good. It's a 14 period, but it looks pretty good. And MACD on the weekly chart looks pretty bullish. But the caveats, the weakness, if you wish, if there's any weakness, is shown on the daily chart. So let's go back. Let's go to take a look at the daily chart now. So here's a daily chart of the S&P, and the first thing I notice here, and we've been seeing this for a while now, is that we had this bearish divergence of MACD on the daily chart. It's on the daily. And then this divergence here is another one on MACD. So insofar as the MACD histogram is concerned, we are seeing two successive bearish divergences, and I don't like that. That doesn't line up well for me at all. In any case, there is there's some solace that in fact it's not on a weekly, it's on the daily chart. So even if we get a pullback, I don't think it's going to be a major one. Let's hope not, since the weekly chart looks so bullish. Well, all right, let's take a look at some other things. Um, First of all, I plotted the retracement from this low to this high. We have Fibonacci retracement, a level where we just stopped at the 38.2. See it here? A retracement level. That's a low we made today, approximately right, almost on target there. And the next retracement level is 50%. Let me open it up a little bit. Okay, here we go. The next level is at 50%, and this is this line here, and it comes in at 31.23. So if we don't hold at this level, which is that 38.2 level, and that's at where it is now, it's approximately 31, it's at 31.55, and that level is at 31.50. So if we don't hold here, the next level that I'm going to be looking at is 31.35, or approximately somewhere between this 9 EMA and the 30 weighted moving average. If we stop here, if we hold between these two on the daily chart, we are likely to see a rally from there. But if we break down, of course, and go down to 618, the 618 retracement, well, we don't know how far down we can go. But I am anticipating a hold at somewhere around between this level that we are at now, at 31.55 or so, and 31.23. That's what I'm expecting. So we'll see how it develops, but I wanted to point that out tonight. Okay. So let's look at a weekly chart on NASDAQ. These are the Qs, the NASDAQ. And you can see I put a retracement. I did the retracements from this low to this high, this current low, current high. And here's where the numbers come in at 23.6, 38.2. These are the ones that we usually deal with the 38.2, the 50%, and 618. And so you can see that the Nasdaq is as many people say, leading the rest of the market. And if that's the case, which I believe, we've seen this for some time now, and historically it's so. We were having a hell of a run here on the Nasdaq. Close to hitting 3 standard deviations, you know. On the daily chart, we'll see that. But anyway, you can see that Williams percent R is above that 50% line, minus 50. And you see MACD is very strong on the weekly chart. Let's look at the daily chart. So on the daily chart, although the chart doesn't show the Fibonacci retracement, but it hit pretty much came very close to the 3 standard deviation line and consolidated a bit and then went up. And now it's really breaking above the 2 standard deviation line. Okay, so the daily chart still looks pretty bullish too, but we do have a bearish engulfing candle now. This candle here totally engulfs this one, the body of this candle. So we do have that bearish engulfing candle on the daily chart. But notice that we had a bearish divergence here, and that seemed to have played itself out. And since it was on a daily chart, it didn't take long. It was just this pullback here. But now we don't have that bearish divergence on Nasdaq anymore. So this gives us some hope that that divergence on S&P might not be much to write home about. Let's see. We'll find out pretty soon. All right, guys. Good night. I'll talk to you. I'll try and do this on the weekend again. Let's see where the market goes from here. Probably a pullback, but maybe not bad, not too bad.